everyone, Susie Phillips here, and welcome back to this Small Account Challenge series. I'm documenting my journey of growing a small $500 trading account using a focused day trading strategy. Today is Wednesday, December 11th, 2024. I'm going to recap today's trade and yesterday's trade. Yesterday's trade was a loss. My win rate is in the 95%. So far in these challenges that I have done, I have taken about 20 trades. One of them was a loss. So I'm still right in there in that 95% win rate. But let's take a look at the numbers. My starting account balance this morning was $987.07. And that's because yesterday I did take a small loss, like I said, and that was on stock CMRX. So let's take a look at that chart where I messed up and why. And maybe my loss will provide some important insights on things to look for and to watch out for. CMRX alerted our Discord group at 5:45 a.m. Mountain Time. And that's when I checked the chart. It had made a 52% run during pre-market, and it had just made a mini gap fill from a bottom bounce off the 200 EMA. Now, where price currently was when I entered, there wasn't much range. And this is not typically a trade that I would normally take. And it's really not suitable for a small account challenge due to the higher float and the lack of range. And I don't know, I think I was just one of those cases where I was distracted or I was bored or there were just too many stocks on my watch by the time that I took that trade. In fact, can't remember the last time we had 8 stocks on our watch list before 6:30 in the morning, my time. But for whatever reason, as I was looking at the chart, I saw price was holding, in fact, proving all of the EMAs. Price was above them all. And so I entered and price hit the next target of $2.45. Which is really where I should have sold, but I didn't sell there. And looking back, it's really obvious that $2.45 had been resistance. As you can see, price was stuck in a narrow channel. And whenever you see this kind of price action, it's always best to actually wait until the breakout above this channel. If you're going to enter, just wait. But if you're in the trade already in that channel, and if it's lucky enough to hit your target, sell at the top of that channel. And as you can see, yeah, a chance to sell right there at this smart target that our algo plots on these charts for us. But clearly I was being stubborn and I paid the price for it, not sticking to my plan to sell at the smart target. So here's how it played out. There was no real news on this one. It was a higher float. My entry at $2.31 at 6:36 a.m. my time. My share size was 430 shares. I sold when price broke below the 50 EMA right here. I managed to get out at $2.29. So between my 430 shares, I had an $8.60. So now, after that trade, my account balance was $987.07. So what are the key takeaways from this trade? Always keep a very tight stop loss. In this case, it was the 50 EMA. I entered just above the 50, and when it broke below, I sold at a 2-cent loss. So 2 cents times 430 shares is $8.60. But always keep a tight stop loss, especially when the range is tight. And like I said, the range was really tight on this particular setup. And it was choppy because of this resistance. But I kept my stop loss very tight by using the 50 EMA. So I only lost 2 cents per share and a total of $8.60. So effectively preserving my capital. Even though that was just really dumb to not sell at my target or even get in there. There wasn't enough range to even make that worth it on a small account. So wait until price breaks out above the chop channel. The reason price gets stuck in a chop channel like this is either because it can't break out of the resistance zone or it needs stronger support. So in this case, it was actually both of those reasons. Once price sold down to the 200 EMA, which was strong support, buyers stepped in and gave it price the momentum required to not only break out of that resistance zone, but make new highs for the day. So if price is stuck in a channel, either let it break out above resistance or let it sell down to major support like the 200 EMA, and then you can take your entry. You can buy at the first buy signal after proving the 200 EMA as support. So my balance after that loss was $987, which is still pretty good considering that was only my second trade in this third $500 small account challenge. And that slightly reckless trade used up all of my trades for the day. So that was all I could do yesterday. But at least my loss was only in the pennies by keeping a very tight stop loss, and that's what I always do. So I still had $987 available for today's trade. So let's talk about how this one went. Today, the scanner was much easier to work with because we didn't have as many stocks popping all over the place like we did yesterday. Like I said, yesterday we had 8 stocks on our watch list before 6:30 in the morning. Overall, the feel for pre-market this morning was far more focused and less distracted, which is very good. Now, I could have taken a couple of trades earlier in the day during pre-market, like the one on CADL, which alerted us in Discord at 5:07 a.m. my time, but I actually just let that one run without me today. It was moving really fast. The spreads were a little wider than I prefer to see, so the risk was a little higher in pre-market. I just let this one run without me, and that's fine. I was okay letting it go. Then came along AMPG at 6:41 a.m. and it was a lower float stock. It was cheaper and it had some news. So AMPG checked all the boxes for me. The alert at 6:41, and I checked price action to identify the strategy that I'd probably be looking for. Price had bounced up off of the 200 EMA, which indicated it was starting a new trend. And based on the smart levels that the algo gives us from Discord and the daily chart, I could see that the $2.09 price level was going to be tough to get past. On the daily chart, it showed a flat 200 EMA. So I made that my high target, and I'd watch for price to hold each of these smart lines that the algo gives us, kind of treat these lines as stair steps along the way to reaching the high target of $2.09. And I'd use the 20 EMA as my trailing stop loss, mainly because the 50 EMA was way too risky. So I took my entry at 6:42 a.m. at $1.33. And since I had $987 available, I was able to trade 742 shares. And as you can see, it followed through. It held the 200 EMA, no problem. We did have a little hesitation in this little narrow range. It held the 20. I was good to go. I stayed with the trade to my $2.09 target. So I was really happy to get out there and take that 57% profit gain that only took me 30 minutes and paid me a total profit of $563.92 for 30 minutes of work. And that brought my small account balance up to $1,550.99. That's more than 3 times my little $500 account balance in just 3 trades. And that includes yesterday's little loss. So let's talk about some key takeaways from this trade. Look for trend signals. The bounce up off the 200 EMA gave us the green light that price was starting a new trend up. Look for price holding smart levels as if it's climbing the stairs. Confirm with the daily chart to verify your high target. In this case, the daily chart showed a flat 200 EMA, right at that $2.09 smart target. So that was a strong confirmation that that would be my target. So it made perfect sense for me to plan my exit there. Flat EMAs represent resistance. So now let's talk about scanners. As a small account day trader, every single trade matters. You can't afford to waste capital on random low quality setups. And this is where scanners come in. They're like your personal assistant, sifting through thousands of stocks to find the few with the highest potential. So take AMPG, for example. This was a low float stock with breaking news and a gap fill on the daily chart to that flat 200 EMA. My scanner flagged it at 6:41 a.m. Mountain Time, giving me enough time to see that 200 EMA bounce on the 1-minute chart and time to look for an entry right at support. Scanners are a game changer, especially when you're working with a small account. And believe it or not, during pre-market, you can sometimes find really great trades using a basic, simple scanner. So let me show you how to set one of these little basic scanners up that you can use on your thinkorswim. Now, this won't give you alerts like the AI momentum scanner that alerts in our Discord group, but it will show you the gappers and the gainers of the day that have volume so that you can look for a setup to trade. To set up a scanner in thinkorswim, click the Scan tab up here. Then, over here on the far right, click the Add Filter. Click Stock in the first field, select Close. In the minimum field, set your minimum price preference. And when I'm working with a small account, it does matter. So I am willing to trade stocks as low as just 50 cents. Now, normally I hate this price point, but for the right stock with news, volume, and a low float, many times a 50-cent stock trade can double or even triple your account balance in a single trade in a single day. So I like to set the minimum at around 50 cents. The max that I'll set it at is around $15 or $20. Now back on the far right, click Add Filter and Stock again. And in this field here, you want volume. You'll need it at least at 150,000 to 200,000. And you don't need a maximum here, okay? Then this green scan button to see the results. And you can toggle any of these columns. During pre-market, mark %, that's this column right here, that will show you the gappers and the gainers. So now that you have a very simple but useful scanner, you can save it by clicking the far right near the flame over here. That little down arrow, and save Scan Query and give it a name. And you're all set. Now click back on the Charts tab up here. Then over on the far left, you can load your new scan as a watch list over in this area. Now, I have no idea what your far left column looks like, but I deleted all of thinkorswim's default items, and then down here I click this little plus sign and then watch list, and then I add watch list from there. And you can load the scan that you just created and it will show up here as a watch list right next to your chart. And then to customize this watch list, just click this little gear icon over here, then click Customize. And for me, I deleted all of their default items and started fresh. Over here on the left, I added symbol, volume, % change, mark % change, and I like to also add market cap, $M. So when you have those, click OK and you're all set. You have a useful little scanner and a nice little watch list that shows you the gappers during pre-market. And that's a great place to start. Now let me point out that after opening bell, this scanner and this watch list will get pretty crowded and it'll be really hard to use. So that's where our Discord channel and the AI Momentum Scanner really come into play. And there you have it. You have a useful scanner that you can use as a watch list next to your chart that will give you the pre-market gappers and gainers. And that's a wrap for today's video. Thank you so much for tuning into this small account challenge. I hope today's trade breakdown offered you some valuable insights in how to trade with a small account and how to spot momentum stocks that can make you significant profits. If you found this video helpful, make sure to hit that like button and subscribe for more updates on this small account challenge. And if you're serious about leveling up your trading skills and reaching your financial goals, consider joining my mentoring group at MomentumStockTraders.com. Along with the Discord alerts and trade plans, we dive deep into strategies and setups and tools that can help you make more informed trading decisions and maximize your profits. Happy trading, everyone, and I'll see you in the next video. Till then, keep building your small account, and remember, it's all about strategy, risk management, and staying disciplined. And let's grow together.